Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, welcome back to the show.
Jim, pleasure to be on the show. I've just come back from several big shows, and I've got lots to talk about.
What was the Metals Investor Forum in Vancouver like last week?
Jim, this is the strongest show that I've seen since they started around 2015 or so, most of which I have participated in. When I left on Thursday, I wasn't sure what to expect. I could see that the resource juniors were still doing considerably better than the non-resource listings. But when I got there on Friday, I was stunned to see that Joe Mazumdar had a full house of people listening, and there were still people outside chatting to the people manning the various booths there. And I thought, this is odd. Of course, we did have the roundup, which was the 4 days before this, the Metals Investor Forum, and apparently 5,000 people went to this largely technical show. And then, of course, on Sunday and Monday was the Vancouver Resource Investment Conference, and I figured, well, these people are simply here because this is a confluence of all these conferences, and they just happen to be here. And but the next day, when it was my turn, again, I'm facing a full audience, even some people standing. And before I started my talk, I asked the audience, who here thinks we are still in a bear market? And I watched a couple hands go up tentatively. So I asked, who thinks we're in a bull market? And then again, I was stunned. Only a couple hands went up tentatively. And then I realized it. We are in the eye of the hurricane, where we are transitioning from a horrible 10-year bear market that people are still remembering very well, heading into a raging resource junior bull market, which people sense, but it's too soon to see the validation in the markets because we've just had a terrible year in 2022 where everything ended up severely down at the end of the year. So I think we are indeed facing a multi-year bull cycle, and my presentation was all about that. We talked about it last week, the two drivers, the energy transition and the need to increase the supply of certain key metals required, in particular for the electric vehicles. And then there's also the geopolitical problem of the continuing divide between autocratic nations such as China and Russia and the still democratic West, Europe, and the United States, and the potential disruption to the concept of globalization, where certain metals that are better endowed in certain jurisdictions that may have become autocracies may not be available for the rest of the world. And at the same time, these autocracies are looking at the weaponization of the U.S. dollar and the sanctions, and they're all inching away from using the U.S. dollar, creating their own digital platforms to facilitate settlement of trade between each other. And gold is benefiting in the interim because gold is the bridge that allows them to park their money in physical gold rather than in U.S. Debt instruments. So these two structures are going to be drivers regardless of what happens within the resource junior sector itself. These forces cannot be changed even year over year. So I think the forces are in place to really drive a bull cycle. My presentation is now available on YouTube, as is those of the five companies in my session and the backstage interviews. And there was also an interesting development. After I came out of my backstage interview, something happened that hasn't happened for a very long time. People came up to me and were pestering me about ideas and saying, oh, we were former subscribers. We will be subscribing again. And will be is the operative word, because I've checked in the past week since I came back, and no new subscriptions for Kaiser Research. We are still in this eye of the hurricane where the market senses something big is happening, but it's not yet ready to commit, but we're seeing it in the trading activity in the market. And I recommend anybody who listens to this, make sure you go to my Kaiser Research blog comment. It has links to the presentations, and I also have a link to Joe Mazumdar's talk. I think it was an excellent job, definitely worth paying attention. He's put together all these graphics which explain a lot of what has been happening and what he thinks is happening going forward. Curiously, he did not mention lithium, even though Azimuth was in his session, and he mentioned critical minerals only twice in his talk, and most of his companies were of the royalty stream type, which are the only ones that have done really consistently well during this bear cycle. So again, it's cautiousness, conservative attitude. With regard to the rest of the companies, one of my subscribers attended all the talks, and nobody else mentioned lithium. It's still not a concept. About 25% of the companies had the word silver in their name. A lot of the talks were about silver being the next big bull market. I don't quite understand why, but most of my peers and have not yet figured out what is driving this bull market going forward. They've got it right with regard to gold, but in terms of the focus, there were no lithium companies there at the show, but lithium is going to be the spear driving this new bull market, followed by all the others as the next couple of years have finally a great Canadian area play again after a 20-year absence of such a phenomenon.
How are your 2023 favorites doing so far this year?
Well, my favorites are doing very well. As of Thursday, it was up. The collection of 16 companies was up 19.7%. I think checking the prices today at the closing, I think it'll have breached 20%. Now, it did that well at the beginning of last year, and until about sort of May or June. So we'll see. But I love this collection. 7 of them are already up over 30%. 4 of them are up over 50%. There's a couple that are down somewhat, but that's okay. You need some to sit at the dock, because as people start cashing in their gains from the winners, they'll want something to recycle their capital into. And there's a sort of phenomenon that I use to describe the early stages of an emerging bull cycle, which is what I call the popcorn effect. In the beginning, you start with this pan of corn kernels, and it's heating up, and nothing much happens. And then you see one pop, and you wonder, ooh, what was that? And then you see another one pop, and then a few more, and slowly they start popping until you finally have a popping frenzy, and then you end up with a bowl full of puffed up popcorn, which is, of course, the top of the bull cycle. We're still in the very early stages of this popcorn effect, and I'm having a lot of fun with the bottom fish collection. I only moved about 40% of my 2022 collection into the 2023 collection, but in light of this inflection that I see and the logic driving the next bull cycle, I'm now going through the other ones that I didn't have time to check out and slowly adding them to the 2023 collection. I think not all of them are going to move right away. Again, that's the popcorn effect. So this is going to be a very, very fun year. This is actually the best part of a bull cycle, when you emerge from the pit of a bear and you have this wall of doubt that you're climbing, but slowly, and I think in this year quite quickly, probably at PDAC, it will be minted as, okay, the trend is in place, it's real. And interestingly, the January effect, although it was modestly present, was not pronounced in any way, which again may be why people sense that something has changed, something durable has changed, but they're not sure that it will endure. So watch and wait. My title of my talk was Implications of Geopolitics and Energy Transition as Drivers for Resource Juniors. Our friend said, that's a really boring title. So I simply added as a subtitle, Buy Now and Don't Look Back for the Next 3 years.
Are there any new developments in the lithium sector?
There's been several major developments. One of them is in the claystone space, and I've been sort of negative on the claystones, which are these quite low grade, 0.1 to 0.2% lithium oxide deposits in Nevada. And a week or so ago, the Department of Energy made a conditional $700 million loan to Ioneer, which is trying to get the Rhyolite Ridge project permitted. And the holdup there is there's some buckwheat plant that's apparently quite rare, which these various groups for ecological diversity are declaring, oh, we can't have this plant lose its habitat, which happens to be right in the middle of the open pit. That would be the Rhyolite Ridge mine. But the Department of Energy is in essence is saying, well, permitting bodies, let's get this done. We need a domestic supply of lithium. And this week, we had a big day when GM agreed to do a two-stage equity financing of $650 million for Lithium America's Thacker Pass project. Now, this one is held up with indigenous concerns that it's too close to some of their traditional areas. But GM is looking at, for a domestic source, and this deal comes with exclusive offtake rights. It wants to have the lithium for its gigafactories that are going to be supplying the batteries for its future fleet of electric vehicles. And on the day when that news came out, another junior called America Lithium, it had a 50 million share trading day. Now, this was to a large degree just algos back and forthing. And the next day, they put out a PEA for their TLC project, also coming up with a very, very high, $3 billion NPV. These claystone projects, of course, all have, big question mark about the flow sheet. Will it actually work scaled up? And for the, one of the, favorites for 2023, it was called Cypress Developments, which always made me think of some horrible Florida real estate development. They changed their name to Century Lithium, and they have responded also well. That company's up over 50% in the favorites as the market starts taking seriously the possibility that claystones could be a major supply of lithium for the electric vehicle sector. But the other really important development is more and more evidence that the James Bay region of Quebec is turning into a classic Great Canadian area play. And the last really big Great Canadian area play was in the 90s when Diamet discovered the Ekati cluster in Canada's Arctic, and an area the size of Switzerland ended up being staked wall to wall. And there were other additional clusters found, as well as stray pipes outside the land that Diamet had staked, the Abers-Diavik pipes being the ones that became a mine that rivaled the Ekati cluster itself. And then there were others like Gaucho Quay discovered. And what we're seeing now is a similar staking rush. This week I've been busy adding companies' projects to the Kaiser research platform, which covers all the companies. So whenever a company gets a project, especially a lithium project, I put it in there so we can see where it is. And every little tiny junior is now trying to acquire a lithium project. Some in other parts like Ontario and Manitoba and now even Saskatchewan and in the Northwest Territories. But the James Bay region is now becoming the primary destination. And we saw last week Azimuth's stock price doubled when they put out a press release showing that, well, their properties are actually quite close to projects like Winsome's Adina discovery and Patriot Battery's Corvette discovery, and put out some geochem data to say, well, yeah, we have stuff that means that something at least passed through our property, if not there. And the stock doubled. But ironically, Azimuth devoted only one slide in its presentation at the Metals Investor Forum to lithium. It talked more about all the nickel targets that it has staked in the James Bay region. And this is going to be an interesting byproduct of this James Bay lithium area play, in that the James Bay region has been an also-ran, a big disappointment when it comes to base and precious metals discoveries. Eleanor was the best, but it really isn't that great, despite the $750 million buyout it got for Virginia gold. But a lot of this ground being acquired is too far from the trends that have the actual potential for the emplacement of lithium-enriched pegmatite. And this is different from the diamond play in the 90s, where you really didn't know where these clusters came up. They could come up anywhere within a craton, even on the margins. In this case, and therefore, if you staked a big patch of land and did till sampling there, if there was something there, you would home in on it and find it. You'd get the joy of intersecting a kimberlite, and maybe it ended up being diamondiferous. That's not the case with the pegmatites. They're going to be in precise geology. So another fun thing that I'm doing now is watching for the smart companies who have been up there for some time, who are focusing on those properties and new claims that they are staking that have the right geology to host a lithium-enriched pegmatite. And one of the old bottom fish that I've had, Serious Resources put out an update saying, well, they staked a bunch of claims off to the west, which I'm not so sure are going to be in the running, because the lake bottom sediment geochemistry has been altered by a sea, the Tyrol Sea, which covered that area and created a huge smear. But they also discovered on their Chichu project, where they've devoted most of their efforts in the past decade to come up with a low-grade gold system that would benefit from higher real prices in gold, but they actually found sort of up ice from the gold system spodumene boulders. Now, most companies don't have any pegmatite outcrop because they've never put boots on the ground. They're staking these claims based on the geology or closology, but Sirius has gone and staked additional claims up ice to expand and cover the potential source. And the irony would be that, okay, so here you have this tonalite-hosted, low-grade, disseminated, intrusion-related style gold system at the southern end, and yet at the other end could be an ideal setting for pegmatites. And if you have spodumene crystals in boulders, if they haven't rolled too far from the source, you're potentially in the game. Even Midland, Gino Roger's company has started putting out press releases that it has lithium potential. This is after optioning 90% of all the critical mineral rights to Brunswick Exploration in November last year. And Gino's now kind of kicking himself because he wasn't listening to what guys like John Kaiser were saying and paying attention as to why was Bob Wares so eager to auction these properties that were right next to the Patriot Batteries Corvette project. But he's got excellent properties too. He's got a property that's very close to the Adina discovery, and Winsome got halted this week to announce a financing which turns out to be about $61 million for Australian, consisting of three types. They're actually doing a flow-through financing in an Australian company, so clearly they're getting a Canadian audience that benefits from flow-through. They're doing an institutional component. They're also doing some sort of rights offering with $2 as the price for the non-flow-through and $4 for the flow-through, raising $61 million this early in the game, just based on having intersected a good pegmatite at the Adina project and having excellent land location within that whole sort of Corvette trend. This is quite unusual. And of course, Patriot Battery made a new high this week as buying came in, even on the day when the market got whacked, when gold went down $30, $50 or so in one shot, and up. But by the end of the day, it had bounced back. And now there's rumbling that some of these big the lithium producers out of Australia, ones like Pilbara and Mineral Resources, are looking at Patriot Battery. They won't have a resource estimate until probably early in the second half of this year. But with 100 holes already drilled into the CV5 pegmatite, you can calculate 50 million ton footprint. And they published results this year the most northeasterly hole, number 93, had 6-5% sub-intervals within big, long, 1.5% plus intervals, showing that in this direction, this 350 meters of elevated lithium grades within the overall already drilled 2 kilometer long. This is continuing to get richer, and there's the CV4 outcrop about 2 kilometers to the northeast, which suggests that this pegmatite body likely continues under the lake in this direction. So these big companies, and of course Rio Tinto, who got stiffed by Serbia over the world-class Jadar project, it wants to get into the bedrock business in a big way. It's already into the brine business. And when you consider that lithium's going to be $100 to $200 billion a year market by 2030, 35, this is big league. That's the league of copper and of gold. And so for these big giant base metal producers, it wouldn't surprise me at all if we see Patriot Battery Metals, whose primary landholding is this 50-kilometer long trend where they have multiple additional exposures of pegmatite. It ends up just disappearing in a hostile takeover bid. The Australians probably offering paper. Rio Tinto can offer pure cash. Should this happen, then the play goes absolutely ballistic. Will this happen so early in the game? Well, the nice thing about these pegmatite results, if they're properly presented, you can tell. You can do your own back of the napkin resource estimate, and Patriot has provided the information that would allow anybody out there to really understand what's going on. Network, of course, is something that comes later, and you need to have access to the material to see what little devils lie in the details. But so far, the Corvette pegmatite is looking relatively clean in this regard. And if we have several $1 billion injected into the pockets of the shareholders of Patriot Battery, where do you think this is going to go? Well, it's going to go into the other companies that are within that trend, in particular Brunswick, and of course Winsome, which has a nice chunk, and even Azimut and Soquem, who have a strip that connects from the bit between the Brunswick land, the Winsome land, and the Patriot Battery land. The problem right now is snow is covering everything. Nobody was thinking about pegmatites last year, so even if they're in the right geology, they won't know where to put a drill and drill the holes until they put the boots on the ground. So the next really big wave for drilling exploration will be in the fall, September and onwards, when they've seen where the targets are, and usually they're outcropping or very close to surface with small outcrops here and there indicating where it is. That's going to be a big drilling season in the final quarter of this year, and I think the upside explosion will probably happen during PDAC, which is about a month away from now. And in terms of the last great Canadian area play, which was started in late 1991 when Diamet reported the initial ICADI results, we are now almost tracking in calendar month terms. We are in February of 1993, ahead of the big PDAC where Pat Sheehan put out this short course on diamonds, which everybody attended that could, because nobody knew anything about diamonds. Most geologists know nothing about lithium, so there's this learning curve. Everybody is scrambling up, and you're going to see everything explode on the upside. And if one of these majors enters this James Bay region, then watch out. Then there's going to be no stopping this. And this will last several years only, but within several years we'll know where all the pegmatites are, what their grade is, what their size is, and all that. And then the number crunchers can decide which ones are going to end up going into production. So this will be a 2 to 3 year discovery exploration boom that will then, all the money made and all the teaching that will have been done for the Gen Z and millennials who will come into this because they're attracted by the idea of lithium leaving the planet not a furnace by 2050. They'll have become educated on how to think about this, which is why I'm so bullish that we are heading into not just a 2 or 3 year revival, but into a decade-long bull cycle for the resource juniors.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.